Ladies and gentlemen, welcome to the Midday Market Monitor. I almost forgot the name once again. We're going to get it one of these days, I promise. But that being said, things are moving. At least there's a few things that are moving. Mostly, we are in a small volume territory right now. Still kind of in holidays. You know, we have New Year's coming up here soon where the market will be closed. And then it looks like things will start to pick up again as we start to get back into earnings season and things should start to ramp back up. But that being said, silver back up to $70 on the iTrust or iShares Trust. And at the bottom here, this was another one that I thought was crazy. This is SoFX, SOFX, which is the 2x leverage SoFi ETF. And if we go to SoFi here, you'll notice, based on this fund, which should be doing 2x SoFi's performance, you would think that they would be down roughly 5% or 4.8%, something along those lines. On the other hand, SoFi is actually up slightly, 0.3. I mean, this is leading to another reason why I'd never touch these funds, because the funniest thing is, this fund is never going to do this to the upside. It's only going to do this from the downside. And honestly, I can't even really explain this to you. I need somebody that actually knows what they're covering here, but this is exactly why I don't ever touch these 2x levered funds. Maybe it has something to do with the end of the year. I do not think that this is arbitrage at all. I do not think it's going to have a day where it bounces back. I think that this is just going to be one of those times where it ends up facing a massive sell-off, and you're not going to see that on the other end. But who knows? Maybe I could be wrong. That said, don't touch these funds, okay? If you want leverage, there's other ways to do it, potentially margin, something like this, but not going through those 2x leverage funds. Unless you're doing intraday trading, that might be a little bit different. But yeah, my solution would be not to go into these. Okay. That said, then we got obviously the main news of the day, which is that Meta is acquiring Manus AI, which was sort of the first real solution for agentic artificial intelligence, following the likes of sort of like a Cursor or a what was the other one that Wix owns? Somebody please tell me what's the other company that helps with like vibe coding that Wix ends up owning? I forget the name. It's such an interesting name. It's got numbers in it and everything. Anyway, that being said, Meta continues to do the right thing. They are acquiring every piece of the ecosystem that they need to really and truly offer an amazing AI solution. Manus AI, I think this is a great great pickup from them. Fastest company in the world to 100 million in ARR, not 100 billion. A little bit of ways to go from there, but yeah. Base 44, thank you so much. That's exactly what I was looking for. Yeah. I watched your BMR video earlier. I'm so disappointed with BMR in general. I'm down so much on it. I can't even bother to sell now. I don't know if it's time to sell if you're still bullish on Ethereum. Like, that's the thing too. It can get a lot worse before it gets better in the short term. But, you know, there's comments in that video talking about how BMR is going to get liquidated and all of this stuff. That's just not how it works. So they're holding on to Ethereum. Ethereum's not going anywhere. If you believe that Ethereum will get back to new highs, then, and you're a long-term investor, you have nothing to fear. However, the main part that I tried to get across with that video is the idea that Ethereum is going to get worse before it gets better, as Sean Farrell said, is now their primary assumption. It has to be, because that's how little they're buying Ethereum now. I mean, it was by far their lowest raise, by far their lowest purchase. Well, Ethereum is not even that high of, a price, under $3,000 per share. So you absolutely need to be patient, but it could get a lot worse before it gets better if they really do believe Ethereum is going to go down to 2,000. You know, that's a 33% haircut. Absolutely crazy. Okay, let's jump into some videos of the day. I have some food in front of me, so I got to eat this. And it's not going to be a super long stream. I always say this, and then those are the days that end up being like my longest days, not because there's a ton of news, but just because we usually get into good conversation. That said, I'm going to eat a little bit, so I want to hear about some of these videos. Is the AI theme still driving the markets? What is happening with silver? Is Ford bowing out of the EV trades? All of these things I'm interested in knowing. You know what's crazy is Tesla really is the only company that's making EVs at scale. Like it's nuts, man. I remember early on, like if you guys know my story, Tesla was the first company I ever purchased back in 2015. I didn't hold it for very long. I think I ended up selling it, and like I had like 5 shares or something like this. It was nothing. But that's how I started investing whenever I turned 18. So I ended up buying Tesla and everything. And the constant bear thesis back then was, well, the second that Ford, the second that Porsche, the second that any of these companies start wanting to manufacture electric vehicles, they're going to get crushed. They're going to get obliterated. And that's just not what happened. And now you're seeing them, a lot of them are cutting their losses, and they were taking massive hits on EVs. They never made it profitable. And honestly, Tesla's the one that's doing its thing. Actually, let's watch that video first. I had another one queued up, but that goes well into our conversation. So let's from the CEO of Ford right now.
Discuss it all is the former CEO of Ford, CNBC contributor Mark Fields. Mark, good to have you. Haven't talked to you since the Ford announcement, and you know, obviously, what a difference a year makes in terms of the landscape here domestically for EVs. Does it make sense to you, and sort of how do you think about 26 when it comes to the domestic market?
Yeah, well, when you think about the automakers and the announcements you've seen from Ford and GM this year, and I'm sure GM's going to have some announcements probably in the first quarter or first half of next year to take some write-downs. They're starting to get realistic. They got ahead of their skis in terms of the demand that they expected in the marketplace. On top of that, obviously, you had the changes from the administration, which took away the federal incentives, the $7,500 federal incentives for EVs. And so they realistically said, listen, we put in all this capacity. We're not going to be able to use it. And, you know, they're going to have to write it down. And at the same time, pivot back to not only ICE engines, but more importantly, hybrids, which are the better choice for consumers. So it's not a surprise from my perspective. I think on the domestic market for EVs, I mean, listen, you're going to see the fourth quarter probably come in probably about 45, 46% down from the third quarter, and probably almost down 40% from last year in the fourth quarter. So, you know, I think for the full year here in the US, EVs will be down about 2 or 3%. But if you project out the fourth quarter performance, you're going to see, you know, an EV market that's going to, particularly versus last year, continue to decline. It'll stabilize and start growing again. But you know, the automakers have just been realistic and said, we have these stranded assets. We're going to have to write them off. We're going to have to listen to consumer preferences, and that's what I see going forward in 2026.
Yeah. Does the U.S. domestic market then become very different than the rest of the world in the sense of the rest of the world seems to be buying EVs at a greater rate? Obviously, we talked about China's ability to fulfill that demand. You know, I'm just curious, do our companies then suffer when they're trying to sell around the rest of the world?
Well, I think they'll suffer in terms of when you're not competing kind of at the coalface with the most competitive in terms of manufacturers of EVs, which are the Chinese, based on their cost structure, based on the electronics and the technology that they're putting into the vehicles. Over the medium and long term, you do pay a price. I mean, just think about this, David. You know, 50, 60 years ago, when the domestic OEMs decided to leave Japan because they couldn't compete there, The Japanese made major inroads around the world. So I think it is a medium to long-term issue. But listen, in the short term, I think this is going to play to the domestic OEMs' benefit, because they get to pivot back to ICE engines and hybrids, which, again, hybrids are a better solution for consumers here in the US, but also around the world. And I also think you're going to see a bit of a backlash in a lot of these export markets that the Chinese are taking advantage of. They're just trying to export their excess capacity right now. And at some point, those governments are going to wake up and say, this is not good for their own markets. So, I think it's a mixture of a lot of different things. But yes, medium to long term, the domestic OEMs, if they're not competing head on with the toughest competitors in EVs, they'll pay a price for that.
Yeah, interesting. Is hybrids the way that is best for consumers? I've been thinking about it. Like, does that sort of help with the, especially for daily commutes, like not long travel, but just the ability to fill up really quickly, but also if you're going on really short trips that you're not spending a ton on gas? Or do you kind of get the worst of both worlds? 3-year used Model 3 and Y is the best vehicle per value that you can buy. All right. Food in the mustache? I don't believe you. Nope. Yeah, it's good for long travel as well. Yeah, that's what I was thinking, Nate, is like you still would have to get like oil changes and all that stuff, all the stuff that is really nice about having an EV. But then you'd have to almost service 2 vehicles in one. I don't know. Okay. EVs are better. They charge while you sleep. Yeah. So the thing is there, if you're going on like a really long trip or something, do you want to stop and charge for 45 minutes? And obviously they make that journey pretty easy for you, or at least they try to with Tesla diners or what have you. And, the screen on the inside of the car makes it pretty enjoyable to just be able to sit there and relax for a bit. Or do you just go into a gas station, you pump for 2 minutes and you leave? I don't know. For me, for my lifestyle, definitely an EV fits, what I need. I'm never going on long trips. I barely drive. I could charge at home, and I would never, ever need to charge on the road. But yeah. Just don't drive through water. I don't think that's how that works. Dumb arguments. After 3 hours, you have to stop and pee. I don't know if you've met me, Z-Man, but every 45 minutes I have to stop and pee. But that being said, one is, are you going to have to go off route a little bit to find a supercharger? There's not a lot of them right now. And, well, it depends. But, where I am, there's a few. But depending on how far of a drive you're going, there's not enough, not compared to gas stations. And then, yeah, you're not peeing for 45 minutes. Okay. Tanner, did you get some TELUS stock for the 9.5% dividend? No. Okay. You don't have to wait for 45 minutes. 20% to 80% is like 25 minutes on a yeah, but that, I don't know. It's still, you're going from 20% to 80% is a 60% charge that takes 25 minutes. It doesn't compare to gas chargers. You can pee and eat at the same time? Okay. No, I don't have a Tesla. Definitely thinking about it. That said, I don't even need a new car. So what I'm trying to do is make my existing car, which I've had for, I don't know, nearly 7 years now, I guess. But it also has 70,000 kilometers on it. So, or in miles, it's like 50,000, maybe even less. So I'm not even putting any kilometers on it. I don't drive. So like my car's in perfect condition. That said, I want to try to make it last long enough to where I don't need to even buy a car. I mean, I'd get a robo-taxi or something like this if I could own that and then have that just drive me around. How long do I have to wait? 2 more years? I can do that. You know? Haven't heard the word kilometer for ages. Do you guys know how many countries use the word miles? I mean, you guys are sitting alone. It's actually crazy. You guys are like, yeah, we print the dollars. We can make up our own words. What are you talking about? Like, use kilometer. It makes so much sense. It's a kilometer. It's 1,000 meters. It makes all the sense. And then you guys are like, nah, mile. It's so random. But because you guys are like, yeah, we got the biggest guns. We have, you know, we control the printing press. We control everything. We get to decide. And we're like, all right, yeah, sure. We'll just make all cars be able to do both, just in case I have to cross the border. Gosh. A mile is 1,000 yards. What's a yard? What? You guys are just making up stuff. Okay. Plus, a kilometer is further than a mile. No, it's not. That's not even true. You guys got to go back and do it. 3 feet in a yard. You guys don't even know. $3 feet in a yard? A yard is 10 feet. You guys have no clue, even like what your metrics are. Fahrenheit is better than Celsius. You've lost your mind. You guys have random. What is a Fahrenheit? What freezing temperature is at 32? What's boiling in Fahrenheit? I'd love to know that. I don't even understand a Fahrenheit. Okay. There's 100 meters in a football field. If that's true, or sorry, 100 yards in a football field, that's the funniest thing ever. Is like a yard is designed for football and that's why America uses it is hilarious if that's true. Yeah, 212 is boiling. A nice even round number to remember boiling at 212. Celsius makes all sorts of sense. 100, nice round number. 100 is boiling. Freezing, 0. Okay? 212. You guys are like trying to justify. You don't even know how long a yard is. I'm from the United States, but I can agree that the metric system is better. We can remember 3 digits. You guys are just guessing how long. Tanner has been permabanned from the United States. Okay. Let's get back to the 1 yard equals 1 bald eagle. Okay. Let's get back to the thing. My dog, I think, wants to be let out of the room. 1 second. Okay. Tanner, look at Rivian. No. Okay. Let's go ahead and look at another one of those videos. I wanted to see if the AI theme is still in a great position for 2026. This will be the exciting thing. By the way, I'm going to try. I'm asking for permission right now, because supposedly I don't have this sort of permission. But there's a big announcement tomorrow for me, and I'm going to be giving to you guys. And I've asked for permission if I can say tomorrow, but that's my hope. Right now, I think, or the original time was going to be Friday, but I want it to be earlier. Friday just doesn't work. I don't know. Yeah. You got engaged? No, nothing like this. Boot woot. What's tomorrow in Canadian? Yeah, we're on the same time zones, at least for the most part, right? Does Canada have any extra time zones? Because we're kind of a little bit wider than you guys, right? Friday is a year away. Be a rebel and say it. I don't have that type of power, to be honest. I for real do not. Okay, let's go ahead and watch this video and get a sense for if AI is the theme.
Joining us is Dan Greenhouse, Chief Strategist and Managing Director at Solus Alternative Asset Management. How are you feeling, Dan, going into next year after we've chalked up another double-digit gain for the market this year?
I still feel pretty good. I keep talking about the calendar.
Forgot about Alaska. My bad. You guys are right. You definitely have many more time zones. My apologies.
Has turned, but what are the themes still at work? And the AI theme is still driving markets top to bottom. And we're talking about the SoftBank deal today. It's hard to imagine that this theme ends when you keep getting headlines like this of this size. And so I know everyone's worried about all the worries that we've expressed day after day, week after week. But at the end of the day, that theme still seems relatively in place for me. And with it, it probably continues to drive markets higher.
Which is just the sheer spend on AI?
It's the fact that we haven't fully adopted it yet. Companies are only beginning to sort of implement it in a meaningful way and get the productivity and efficiencies that are going to help support margins. But yes, the amount of spend and every single conference call that we listen to, every conference that these guys appear at, they all keep telling us demand is greater than supply. And at a minimum, you want to see, for this to end, you want to see that slow down. And I haven't seen any evidence of that
yet. No,
there's
been no let up. Obviously, we're just through the last quarter in terms of all the hyperscalers and everybody else reaffirming or increasing their CapEx plans. That said, the bigger question, I don't know, are we going to get it answered in 26, which is, what's the return going to look like on all that invested capital? I
know everyone keeps talking about this, that this is the year where we're going to have to see the return. I don't know that that's the case. I mean, it could just be another year where we spend $1 trillion. Obviously, there's some differences because now we're tapping the debt markets to a greater degree than before. But as you know, all these companies have basically their leverage is basically a half a turn.
Many of them, not Oracle.
No, Oracle's the exception at the 3 or 4 times debt to EBITDA. But the Meta and the rest of them are called half a turn of leverage. So they're not particularly leveraged. So they can, and we know the IG market is 10 trillion in size, give or take. So there's ample room for this to continue. But I know, again, the main point is people keep saying we need to see. It seems like to me like a nice thing to say something different, but I don't know that that's rooted in any.
So we're just going to sit here next year, have the same conversation that we're having right now?
Why not? I mean, listen.
And what does that mean for the S&P?
Well, listen, this is the argument that as long as these companies are as large as they are, you need to continue to be if this is what you do. It's not what Solus does, but if this is what one does, you need to continue to be exposed to those names because you're just going to underperform. But at the same time, we've seen, as everyone has noted, some change in allocation here. Some of those larger names have sold off. Even some of the derivative names like Eaton and Vistra and Vertiv have sold off, and other names have picked up the slack, healthcare, financials, some materials names. So you're starting to see a rotation. So that's really the question, I think, going into next year, not whether the AI story is going to blow up, but rather whether you want to continue to be exposed to the largest, most obvious names rather than something else.
Yeah. I mean, that was pretty based, I guess. The idea that we are just at the cusp of the actual productivity right now, we're just in build out, of course, is true. I don't know if the market has like a problem agreeing with that. I'm sure everyone agrees with that. So I don't know what it'll take to actually end up seeing some of these AI names catch a higher bid than what we've already given them. I obviously, just based on growth, just looking at them like software names, think that they deserve this. Really quick, I need to point out this comment real quick. Tanner, are you going to Turkey anytime soon? Dude, I see it. Okay. But what gives you the right? Take a picture of your head right now. Send me your hairline. Okay. I'm trying my best out here. Hymns? No, dude, I'm just going to let it go. Truth is, I couldn't care. I honestly don't care. I literally just ate turkey. That's what I was eating. I'm bald. I didn't realize it all. Like, I just have an army of bald people that watch me here. So, do you want me to get a little vulnerable with you guys? This is something that is only happening in like you're some of you old heads are about to learn something new. Okay, this is going to be a little bit sad. I'm going to be vulnerable. I'm going to open up. You guys are going to get to know me. Whenever I was a kid, I was very much into computers and gaming, and wasn't a big sports guy growing up. All my brothers were. They were good at that. I thought if I can't beat them, I'm gonna, jump on the keyboard. And so I did that from a very young age. And I used to wear a headset, the old Turtle Beaches and everything, like the Astros and all those headsets. Well, they're not light headphones. They're heavy. And I was a little kid. So I swear, you can feel my head through my hair. I've got a dent in my head across from where, because before I was 18, my skull wasn't ossified. I've got a dent, bro. So I can't go bald. So if it ever climbs all the way back there, where I start getting comments, not from you guys, not from the 1,000 people watching right now, but from the, the new people that end up joining the stream and start going like, is that a dent? I might have to go to Turkey. Or I'm just going to be wearing hats forever. But it's not even that much. I think they're like, 0.5 pounds or something like this. But you just wear it all day and your brain is mush whenever you're 12 or whatever. So I've got a dent. I've got a line. I can't shave it bald. I love this so much. Why are you guys picking up my insecurities? Hashtag I have a dent. I promise you it's true. I think I've even shown it to like Amit and Roy and stuff. And dude, I'm just like sitting around dinner and I've got grown men laughing at me. Like belly laughing, deep belly laughing. And I'm over here looking like that literal meme with the guy with the caved in head and everything. All because I was trying to play like Halo. But I was on the comms, bro. I was, you know. Shave your head at 100K. I have zero incentive to do that. Okay. Dent gang. Who's with me, though? Am I the only one? I might literally be the only one. But I'm telling you, guys, the way we're going and like putting VR headsets and all this heavy equipment on the little children's faces, we're going to have a whole new generation of kids with dented heads. I'm just the first one. Okay. I was born in 97. Which I think actually puts me on the very, very cusp of Gen Z. So I'm leading the charge. I'm the guy with the flag. I'm running out first. All right. Everyone behind me has dented heads and AI girlfriends. It's not a good look. I don't even want to be a part of this team. But, you know, I got to fight for my nation. You know, other people have dents in their heads from playing football. I'm not alone. I know it's so weird. I tell people I'm 28 and then they're like, oh, okay. And then you tell them that you're born in 97 and then they're like, oh, wow, you're young. The only thing that saved me was that I wasn't born in the year 2000. I'm going to have conversations with like 40-year-old people in my future, hopefully, you know, knock on wood. And they were born past the year 2000. How can I even take them seriously? I think it's crazy. Like, even like I've got nephews now and they're born in like 2022 and everything. I'm like, what the heck? But I guess that's how life works. You survive Y2K? Barely. You know. It's the Roblox generation. I've never even touched Roblox. I'm not part of the Roblox generation. That's after. That's Gen Alpha or whatever. I don't know. Pre 9/11, he's chill. Here's the craziest part, though. I'm going to get vulnerable with you guys again. Everyone says, where were you? You know, during 9/11. Everyone remembers that moment. I was 4 or so. Like, I don't remember. I don't know. So I don't even know if you can say that I'm old enough for that moment, because I wasn't. And even Canada, I know all my brothers and everything have, like, school got shut down. Everyone went home. Like, it was a sad moment. Like, even Canada felt that. But yeah. I was supposed to be on the 82nd floor of Tower 2 that morning. That is insane. How often do you think about that? How like, that's got to be an unbelievable trip. Like, I was late you worked in the towers. That is insane. Final Destination. No, that's the opposite of Final Destination. I don't know. That's incredible. Well, yeah, I don't want to be insensitive. That's an insanely sad part of history. But, you know, happy that you're with us. My family friend missed the train for work that day. Okay. You guys. Okay. I just saw this report come through. U.S. option market activity has never been higher. Total options volume is on track to exceed an average of 60 million contracts per day in 2025 for the first time ever. This would mark a 10 million plus contract increase year over year and a 30 plus million jump since 2020. By comparison, before the pandemic, there was only 1 year where options volume exceeded 20 million contracts per day on average, which was 2018. Meanwhile, zero DTE option volume is up a record 62% 62% of the total so far in Q4 of 2025. This percentage has tripled since Q2 of 2021. Risk appetite is surging at a record pace. That is crazy. Now we see why Robinhood is doing so well. Obviously, we've known this for some time that this has been this way, and massive retail boom in options. Honestly, in part due to Robinhood. Like I bet you, if you were to look at Robinhood's retail market share for options, it's a large percent. Isn't this toppy? It could be toppy, but 2022 wasn't toppy, and it's right in there. So I don't know enough about options volume to know if there's signals that sign for the bottom, but you look at 2010 here, which was sort of the first recovery year from 2008, the great financial crisis, all the way up to 2018, 2019. These were phenomenal years in the market, and options volume had stayed flat the whole time. So I don't know if there is a real sign to say, hey, options volume is toppy, or a sign of the bottom, or what have you. Having a dented head from so much computer time is the equivalent of having cauliflower ear from so much MMA training. It's a badge of honor. There's a lot of people who will, you might have seen videos of this if you're in the space, but that will actively try to damage or put pressure on their ears to give themselves the look of having cauliflower ear. I don't know if there's many people denting their heads. I don't know if we're quite in the same league. Cauliflower ear is a little bit of a badge of honor. Someone at the bar you start talking a little bit too much smack with, and then you go, look at his ears. Someone whispers in your ear, like, dude, look, check out his ears. Like, you're going to lose this fight. No one's like, dude, you're in a coding competition with a guy with his head dented. You better relax. That's never happened. All right. They aren't attractive. So the cauliflower ear, the dented head, because the dented head, I would say otherwise. And for real, like if you look at my head from here, like you're not noticing it. I'm doing all right, but it's bad enough where I have to tell every barber I've gone to. All right, let's get off. There's new people coming into the stream. They're learning about my insecurities. It's over now. Just like most things in the internet, this will get buried and everyone will forget. I've been laughing for 20 minutes now. Well, thank you. I'm glad my pain can be your, enjoyment. Okay. Let's get back into the market, which honestly, guys, nothing's happening. Markets are flat as ever. Meta and Nvidia potentially buying another AI company. Was it AI 22 Labs? I think it was. AI 21 Labs. Let's see. A Tel Aviv-based startup founded in 2017 that builds large language models for enterprise data workflows. Nvidia, which already employs 5,000 people in Israel and is called the second home for them, would gain top talent valued at roughly $10 to $15 million per hire, marking this the fourth Israeli deal after $7 million of the Mellanox purchase, which is also widely renowned as one of the best acquisitions of all time, by the way, the Mellanox purchase from Nvidia. Okay, cool. They already have been raising from other companies like Nvidia and Google. So Nvidia already has a pretty decent stake in AI 21 Labs. Potentially, though, they're looking to buy the entire business for roughly $3 billion. This is what happens whenever you make way too much money. You get to just go around and, like, have you seen the Michael Jackson video where he's going through the fine art store and he's like, I want that one, and I want that one, and I want that. That's Jensen Huang whenever he goes to Tel Aviv. I'll take that, and I'll take this. And he's got a shopping cart for Israeli AI companies. He's just throwing them all in there. Not even just Israeli AI companies. I mean, they're going worldwide, but yeah. Okay. Thoughts on Oracle thinking about buying $250 calls 6 months out. So I don't have too many thoughts on Oracle, but that company scares the crap out of me. I think that there's a lot of, other names that are huge in artificial intelligence that you don't have to take such a risk on the potential debt, the potential, too many RPOs and not enough actual revenue. Go get a Google, go get Meta, go get Microsoft, go get Amazon. These companies are making a ton of money today. I think Nebius goes to mid 60s. Why would I think that? Every day that goes by, they, fully sell out. They get closer to building more data centers. I don't think that it should be continuing to go down. That doesn't mean that it won't. Black swan events can happen. People can get scared about the AI trade, but overall, this company is making more and more money over time. And at an insane rate. Okay. If Nebius goes lower, I would genuinely load the boat. Yeah, me too. Me too. I'm loving this company, but, I feel a little bit happier with it at 85 than I was feeling at 75. That's for sure. Jason said 60. Oh, okay. Yeah, I mean, if we get down to 60s and he believes that's going to happen, I'm going to be a big buyer. I like a TA for my confirmation bias. So if he's saying that I'm going to be able to get better prices on Nebius, I'll take that. But oh, wait 1 sec. Steve is calling me. What does Steve want? What's up? Is he watching the show? Did he hear about my dented head? Who is spreading rumors? He just sent me a message that said Meta, all caps. He's freaking out, man. All right, let's call him. Okay, he literally just called me. Steve, you're live.
Yes, I am. How are you?
I'm doing great, man.
Are you excited about Zuckerberg buying his way out of his blundering words from last quarter?
His blundering words?
Yeah, about CapEx spend, they really don't know how they're going to monetize it, et cetera, et cetera. At least that's the way the street took it. But how do you like the deal today?
I like the deal. I think it's phenomenal. They're getting more and more pieces of the AI chain and at a very good cost. Everyone knows what Manus AI is.
So, well, you do. Most people don't.
Most people in our field know. The fastest company to 100 million ARR.
And under the leadership and with the resources of Meta, I tell you, I'm really excited as a Meta shareholder.
Yeah. But What do you think this means? We're at 667, still lower than last quarter.
My price targets aren't changing. I said Meta is going to be anywhere from 750 to 1,000 next year, and I think 850 is a realistic number. That it may even be conservative because I'm expecting Meta to get back to 750 beginning of February after the latest quarter and annualized numbers, because last quarter was just a drawdown on an accounting blur. That's it.
Got you. Yeah, so you're still positive and you're buying more here?
I mean, I have a big position in it. I'm not buying here. I had said if it got down to 550, it would make sense for me to buy, but I am happy with my position in Meta.
Yeah.
I'm certainly not getting rid of Meta. I can tell you that much.
Yeah. Okay, cool. All right, brother.
You don't sound excited about Meta.
No, I just this news is like it's like you just got the news.
I did just get the news.
Oh, okay. Well, I've been sitting on it for a little bit.
I've been busy all day.
I've absorbed it already. I'm excited for them to be a part of the team. I'm hyped on it. But you know, this was 9 o'clock news.
Okay, and I am just getting the news now. I still haven't turned on my computer. I don't even know what the market is at. I've been doing a bunch of shit. I took the day off. I was originally going to stream today, and then I decided not to because I ended up having to do so much stuff. So
there's nothing happening other than Meta. There's nothing happening right now.
Nothing happening.
I've got 1,000 people in the chat, the greatest community of all time. We're ready to pounce on any piece of news that comes our way.
Okay.
But
all I know is you better have your movie list ready tonight.
Oh, okay.
Because we last night spent half an hour. I had 52 movies on my list, and I had already refined it, and I think we got it down to a top 25.
Okay, so it's different than before.
I mean, it's similar but different. Yes.
Is it on the same doc that I had sent you?
I don't want you seeing it.
Okay, cool. Good.
Yeah. So, and then the chat had a very interesting idea that we should try to get Amit to watch every movie that we both have together, even though we know that's not going to happen.
You could not pay him to do that.
I know.
Honestly, I don't even know what, like, maybe we can get him to watch one movie of each.
Maybe. Yeah, I think that would be a stretch.
Do you think he's seen The Social Network? I bet he would sit through that.
Ooh, I would hope. See, that's something, if he didn't, I think he would sit through without giving us a hard time because it's about Zuckerberg.
Yeah.
And it's something I think he would be interested in, but I think he's seen it. There's no way he hasn't seen that. Come on.
Yeah. I mean, bro, there's a lot of things you think that he would have seen by now.
I know.
Okay.
I know. The one thing I need to see the BlackBerry movie. I have not seen it yet.
I don't even know what you're talking about.
There's some BlackBerry movie that's supposed to be hysterical that came out the other year. So it is on my list of things to watch this weekend.
All right. I'm excited to see your list. 9 p.m.
You have fun. So 9 or 9:30. I don't want you to rush.
9 should be fine.
All
I
right.
will. I'll talk with you then. I'll have to refine my list. Maybe I'll do that live.
Wouldn't be the worst idea in the world.
Okay.
Later.
Talk to you later. Bye. What a gem. Yeah, we have a list. No, I know what BlackBerry is. I didn't know that there was a movie about it. I had BBM. You guys are acting like I wasn't around. Okay. This is also why I thought for real that I've been raised in the greatest time alive is I've seen and everyone probably believes that life has, gotten better over time. But I had to get the old phones, the flip phones, the Razor things, tap on the actual keyboard. I had BlackBerry, I had BBM, I had an iPhone. I had the original iPod. And then I found Google Nexus and was taken away from the Apple ecosystem, and I'll never go back. Please tell us the latest on BMR. Well, the latest on BMR is really, I put a video out on this, but they ended up showing us how much that they ended up purchasing of BMR, and it wasn't a lot. It was an extremely small amount, and that didn't excite me. Let's see here. Tony, I don't trust Steve when he says that he hasn't checked the market. Well, he's a busy guy. Yeah. Steve Jobs destroyed BlackBerry. It's true. It's true. Are you buying / bought the dip on Solana or staying out of crypto for now? It's not that I'm staying out of crypto. I'm buying a lot of crypto names, but I think that I'm more focused on Robinhood or Coinbase or the businesses that use crypto rather than, just buying crypto directly. So I'm not buying Solana right now. I do have a position, I do have Solana, I do have Ethereum and a small amount of Bitcoin, but I'm not actively buying any of those right now. Okay. But yeah, I have a movie list of 25 movies that are my favorite movies with a couple others. I'm not going to stay on this. The markets are still open. I'm looking at them, but guys, I'm telling you, the NASDAQ is down 0.03%. That's as flat gets. Okay. The SPY is down, dude, like you're hard pressed to find markets that are this flat with very little volume. We're down 0.01. That's flat. Nothing's happening. We're essentially still on holidays right now, but I could not go live. Which, by the way, tomorrow, if I get permission, I have not gotten permission yet, I'm hoping to do a very big announcement. I need permission. So we will see. But so far, I've not gotten that. Okay. My top 25 movies are Catch Me If You Can. This is not in order. Pulp Fiction. Usual Suspects, Wolf of Wall Street, Goodfellas, Godfather, American Gangster, Departed, Dark Knight, which I've actually thought about switching out. And you know which one? I was thinking the Spider-Man Into the Spider-Verse or Across the Spider-Verse. I don't know which one. If you guys haven't given those movies a try, I mean, I'm telling you, they are perfect 10 out of 10s. They're unreal good. I get that it's a cartoon, and I don't like cartoons or anime or any of that stuff, but they are unbelievable. Thank you. I cannot wait for the next one. You're right. Turns into the Prowler. Come on now. Star Wars: A New Hope. Sorry, let me just clarify. Shawshank Redemption, Usual Suspects, Ocean's 11, which I could take off as well. It's a good movie. It's a fun movie. It might not be a top 25 for this list. Then we have Good Will Hunting, Step Brothers, The Social Network, 12 Angry Men, Law Abiding Citizen, Dazed and Confused, Superbad, The Gentleman, Oppenheimer, Scarface, The Big Short, and Inside Man. What do you think about that? Take Oceans off. I definitely could take Oceans off. So let me just mark this. This one could, well, I don't like that. instead of changing it, I'm just going to do this. Ocean's 11 could be removed. The ones that I was thinking about replacing them with was Parasite, 7, The Hurt Locker, 21, which, I mean, come on, 21's not a top 25 movie of all time. It's just good. Pineapple Express, 40-Year-Old Virgin, The Hangover, The Kingsman, and I did put Oppenheimer in there. Parasite maybe would go in there. Seven's really good. No Dazed and Confused. I don't know what you're talking about. It's staying on there. It's like for real, so good. Boondock Saints, 40-Year-Old Virgin. Yeah, it's hard to condense a list of your favorite movies across all different genres because it depends on what mood you're in, right? That's the hard part. It's like, do I want to watch all of these right now? No. But at any point in time, could you get me to watch Usual Suspects, Goodfellas, American Gangster, Shawshank Redemption, Social Network, Dazed and Confused, The Gentleman, Oppenheimer, The Big Short, Inside? I mean, I would watch any of those at any time, any chance I get. V for Vendetta would be up there for me. Not for me. It's good, but Lord of the Rings would be up there for me. But how do you pick one? How do you pick one? Inglourious Bastards, Scott Pilgrim, Jojo Rabbit. I don't even know what that is. She's the Man in Django. I had Django on my list and then I removed it. Django might be better than Ocean's 11. I might just replace that for now. Two Towers. Just add the trilogy. No, you're breaking the game now. Okay. Or else, like, for real, you guys don't understand. I'm a big, like, you can catch me at a Harry Potter trivia night. Okay. You guys go, you're in Toronto, something like this. Oh, there's a Harry Potter trivia night in our area. Hey, guess what? I'm there. And you know what? Not only am I there, I won the thing. That's what you don't know about me. Okay, no, that's a lie. But I enjoy it. But how do you pick one? How do you put just one up there? You know? You look like a Harry Potter. Saving Private Ryan's good. James Bond. Yeah, I would put Casino Royale, but it's not a top 25 movie. Is FOMC right now? Hold on. Why wasn't this on my list? Emergency meeting at 2. Okay, whoa. Hold on. Not seeing anything just yet. Let's see.
No change at all, and some wanted to wait for more data. Remember, the government was still closed. They were still getting data from the closed government period there. Inflation risk was seen tilted to the upside, labor market risk to the downside. And what you're going to hear now is a debate between those two sides who care. Some care more about inflation, others more about employment. Those supporting the cut said it was in line with forecasts for future lower inflation. Now, the committee did appear to agree on the need for future cuts. The debate was about the timing of future cuts. Most judged further rate cuts appropriate if inflation declined over time as expected. Some, however, wanted to keep rates unchanged, quote, for some time to assess the impact of recent cuts they'd already done. Others argued a move to a more neutral policy would help forestall what they were concerned about, a quote, major deterioration in labor market conditions. To forestall that, many saw a low probability that tariffs would lead to persistent inflation. That concern about tariffs was diminishing there. Several were concerned, however, that higher inflation would become entrenched. If it feels like I'm going back and forth, it's because that's the way the minutes read. Many expected tariff inflation to wane, but debated when and by how much. Some saw persistent price pressures, however, unrelated to tariffs. The majority of participants noted that inflation is above target for some time and had not moved closer, and some were concerned that the idea of the Fed not being at target would become entrenched and the commitment to the 2% target would be undermined by that. The labor market was seen continuing to soften, but stabilizing next year with appropriate policy. Now, this is a couple interesting facts that we keep talking about on CNBC. When you read the minutes, you see that the Fed itself is seeing this K-shaped economy with strong spending by higher income households, while lower income households are making, quote, adjustments for inflation. And a number were hopeful that higher productivity, possibly reflecting AI, could boost growth without inflation, however, also dampen job creation. So, Brian, I wish I could be more concise about how the committee felt, but the committee's feelings were literally all over the place, Brian.
Yeah, you and I have been doing this for a long time. Steve, normally to your point, I think it's pretty concise and clear. Here's how we feel. It does feel the last few months, and with these minutes in particular, that we know there's dissents. I mean, there's been dissension, literally dissents, but it does feel like it's just a little more loose or a little harder to understand. What am I looking for here?
I think you're hitting it right on the head there, Brian. Let's layer in a couple things here. One, we had the government shut down. You had the cutoff, essentially, of official data, the data the Fed relies upon. I think that's a backdrop for this whole debate that's probably very important on both sides. You also have this idea that you have these tariffs of uncertain inflation effects that are going to come through. You did have the alternative data showing a weakening in the job market. So I guess, Brian, you remember that phrase? I forget who thought it up, but I thought maybe I did. But if you're not confused, you're not paying attention. Well, the Fed is paying attention to all of this. And I think collectively they're confused, but some are going to side more on the idea of, hey, we need to really worry about the job market. And others are saying, you know what? For 5 years, we've been above target. We need to get this inflation problem under control.
And there's going to be people that go after the Fed for being confused. I will actually be a little more gentile. It's near the end of the year. I can be nice, right? Why not? And it's that it is a confusing time with tariffs and inflation and AI. We don't know what exactly is going to happen. And I actually don't blame the Fed. I would rather have them say, we're not quite sure, versus be like, we're darn sure, and then have it be darn wrong.
You know what, Brian? You're saying this makes me think of one of the things that you do as a hobby, which is to drive race cars, if I'm not mistaken. If you're driving a race car, you need to think about where the race car is going to be in 3 seconds from now, because you're traveling at whatever, 200 miles an hour. If you're driving an oil tanker, you don't have to make those you have to make those decisions earlier because it turns later, but the future is well in front of you if you're going much slower. And I think the situation right now is some on the Fed say, hey, what? Let's take our time. We've cut 175. Let's chill out. Take a look at where things are going. And there's a bunch of other folks that say, you know what? We have weak jobs in front of us now, and we're going to take a flyer, by the way, on where the car is going to be, which is higher productivity because of AI and lower inflation because tariffs are not going to come through. It's a bit of a debate about what kind of vehicle you're driving, sir.
Well, I love it, and I appreciate it. I wish it was 200 miles an hour, 200 kilometers an hour, maybe. And I would add this, Steve, we'll let you go. The super tanker not only moves slower, but it leaves a lot bigger wake and can do a lot more damage. Steve Leisman, NBC, thank you very much.
Okay. Doesn't seem to be much of anything just right now. I'm trying to also get the volume up for you guys, but I don't know why these volume boosters are not working for me whenever I'm streaming it. Also, don't start calling me Half Pipe Tanner. That's not a thing. This is not a nickname. No one's skating my dent, okay? Sorry, wait. We're still actually covering it. It's not the volume that I would like it at, but we can still hear.
That's kind of where everyone is around the globe in the big economies. So I don't know what the big news here is. If you look at a 2-year note yield over the last 4 sessions, it's trending lower. It had a little bit of a pop right before the minutes came out. I call that the nervous trade. People that were long looking for a dovish possible set of minutes decided to cover. And the minute the minutes were out, we're right back exactly as you pointed out to where we were. Because here's what the market's looking at. The Fed could talk about entrenched inflation. They cut in September, they cut in October, they cut in December. And what were they saying? Entrenched inflation, Liberation Day inflation, tariff inflation. But the reality is the market's looking through this. It sees some growth and some question marks. So it's pricing in the first rate cut for next year as things stand now around June. And all that can change quite quickly. And if you look at a 2-year, yesterday, it closed at the lowest yield close since 10/22, 2 months pretty much to the day. And now let's look at what's going on with 2s30s. And why do I pick the 2s30 spread? The longest and the shortest parts on the curve, because this really underscores what the 2 years been doing. The Fed could talk about inflation, but right after the October meeting, look what that spread did. It steepened. And why did it steepen? Mostly because 2s keep on the soft side and 30s are in their own little world to the upside. And finally, here's what the big news of today everyone's talking about is the big move of late of the Chinese currency onshore yuan versus the dollar. The dollar, as it sits now, is at the lowest level, under 7 in 2.5 years. Sully, back to you.
Rick Santelli, bringing the heat, bringing the passion. As always, love it, my friend. Thank you very much. All right, so that's down. Let's turn now to your macro money because the year is winding down. And we'd like to highlight right now a sector that has really been on a tear the last couple of months. And no, it is not technology. It is healthcare. It is up more than 11% and is pacing for its best quarter since the final 3 months of 2022. So all raises kind of the question, are we finally getting this long-awaited market rotation that a lot of investors, a lot of guests on this network have been saying is right around the corner, but for years?
Listen, there's not going to be a rotation. The only rotation is going to be into the companies that are making more money, that have higher profits and bigger margins. And that's going to continue to be the Magnificent Seven. And honestly, I would reduce that down to a Magnificent Six or potentially even 5. But yeah. Look at these mean comments in chat. Rotation into more AI and blockchain. Yeah, that rotation. S&P and chill for 5 to 10. Well, no one's saying 5% for S&P. And honestly, as of late, it's been closer to like 15% in recent years. I'll take 50+% for SoFi. Thanks. It's, we do a lot of due diligence for SoFi, so I have high confidence. But it's really not that easy. And it's not guaranteed that SoFi is going to be able to do that. And you have so much key man risk. So if something does happen, if there's a product, if there's a regulation change that hurts SoFi's business, which there has been in the past, student loan moratorium literally wiped out their biggest product line. There's no big regulation change that's going to hurt 500 separate companies. So, while I agree and I do individually invest, and I'm such a contrarian in that way, it's probably the worst, quality that someone can have is that whenever someone says something that I even agree with, I'm like, well, it's not that simple. Like, I just have to disagree. What a terrible person I am. Bring me to the gallows. But I do think that for a large percentage of the population, the S&P is the correct choice. It could definitely be negative 50%. What is the Magnificent 5? I thought this comment was going to come up. I would take off Apple and Tesla currently. I find that they are, so far away from the rest of the spread whenever it comes to valuation and whenever it comes to growth rates. Whenever you look at Microsoft, Google, Amazon, Meta, what am I missing? Microsoft, Amazon, Alphabet, Meta, and what am I missing here? I don't remember. Anyway, all those companies, Nvidia, they are all growing very well. And that's so funny. My biggest name, yeah. So all those companies I find have decent multiples, fortress balance sheets, multiple sources of revenue. I think they all sort of fit like a really balanced portfolio. And Apple does as well, but the growth just isn't there for me for the price that you're willing to pay. Like, I can include them into the Mag 7 too. I've got no problems with it. Tesla also, there could be an explosive, high amount of return. Elon's definitely banking on that. $8.5 million market cap is the hope. And but I just don't know if it's as clean of a play as the other ones. It's more of like an extreme name. Like, yeah, you're playing with such potential extreme growth rates that we haven't seen yet, but you're also seeing such an extreme valuation. So it's just harder to put into what I think are staples of someone's portfolio, like those other 5 that I named. And whenever Apple gets back to innovation, I think Apple's just ducked so many easy opportunities. In Apple enterprise cloud solution, even a potential to innovate and get into cars or glasses or something like this. I always see these projects that they're working on, then a lot of them don't come to fruition. It's hard. So Apple could be amazing. I'm just not a super fan of their current position. Yeah, we absorbed the FOMC meetings was nothing. Absolutely nothing. Chime, you still holding a 10 or yes? Has SoFi been forgotten? I'm just talking about the Magnificent Seven, not like my favorite companies of the world. Yeah. Shift 4 is at a 0.32 peg. I'd have to double check that, but if that's true, that's ridiculous. I just also saw that they were rolling out some new products in Europe for public transit and stuff like this, for payments for public transit, as well as a full stablecoin platform. I don't know. I like those companies. Tanner, do you prefer Nebius or SoFi? They're almost in 2 different buckets, right? So which one would I feel more confident in over a 10-year period? SoFi. I think the field that Nebius is in is changing so unbelievably fast. So there could be something that comes out next year and we all go, oh, okay, yeah, Nebius doesn't even have a business anymore. That can't really happen with SoFi. That's the good thing about banks, right? It's like capital is capital. So unless an actual communist ends up taking over the United States, capital is going to be pretty useful. But yeah. Do you prefer Nebius or SoFi for 2026? Different story. I'm not sure. I could see it going both ways. SoFi I do have high hopes for, and essentially hoping that they could still roughly double, maybe up 80, 90% in the year. Which is not normal. Usually you shouldn't put that high of an exciting price target on a company. And if it doesn't, like, I wouldn't write options on that. I'm not saying like, hey, I have 100% certainty on this. I just think with the rate cuts, the dovish Fed coming in, the new products, banking deregulation, like I just think it's the administration to bring up SoFi stock is what we have today. That's good. For SoFi stock, I'm not making a political opinion here. Even Noto said, 99% of the time he votes one way. But if you're talking about what benefits SoFi, he's betting on the current administration. And then for Nebius, over the next year, this company is going to just 5x, 6x their revenue over the next little bit. And that's great. But will the market give them that benefit? To me, I think honestly, if you're talking about a company that could 5x, 10x over the next year, Nebius does have that potential. Maybe I shouldn't get a little, that's a little too forward thinking. Maybe not, but Nebius has high potential. They could land increased deals with Microsoft, Meta, Google, continue build outs, do amazing things. But in the same breath, it could also be taken away from them. When's your girlfriend going to shit out a kid? Yeah. 10x, I don't think so in a year. No, I'm not calling for that. I'm just saying, does it have, you could see multiple expansion on Nebius while, they continue to grow and grow at faster expectations than the market had hoped. We're expecting to get to essentially what could be $9 billion of annualized revenue by the end of 2026. Right now, what are we even at? Here, let me just... Fiscal AI will tell me here in no time. So this is one of the cool things that I like on Fiscal AI, by the way. If I go to... right now, it's on annual, but I really, really like last 12 months. If it clicks, there we go. So for Nebius is a little bit of a unique situation, so we don't look at that because that was a literal different business. We're at a $344 million last 12-month run rate. That's expected to get to $9 billion. So from 344 to 9 billion over what's essentially 6 quarter prints. That's on the more bullish side. Could be closer to 7 billion. But that's what I'm talking about. And people go, 10x? No, what? Frickin' no way. Well, it's definitely a possibility. Depends on how the market wants to value them. And I'm not calling for that, but I would be hopeful for a double. That would be nice. Has to clear it with the kitchen or else that baby will not be for long. No, oh gosh, that's so funny. If I have a kid, I'm gonna have to cook. I am aware of that. All right. Follow-up question regarding Nebius. How much of that revenue ramp is already priced in? Definitely an amount. What's interesting is that whenever you look at their market cap, we're at 21 billion, which is also crazy. Whenever we're talking about the shift of this company, it was at 18 billion a month ago, So to add 3 billion onto this company, these are huge moves. But whenever we look at that, what we can see is that let's do price to sales really quickly because we're not even really profitable. And we have adjusted EBITDA profitability, but that's not even going to be it was for a single quarter. But it'll still be able to get us just a multiple, just a peg down. So 70 times price to sales, extremely high. Okay. So a lot of that is looking forward. But then if I can bring this up, if we go to ratios, and then forward valuations. I'm doing this on Fiscal AI. You look at a forward price to sales of 2028. Oops, sorry. I'll even look quarterly. You see for next year, it's potentially 9 times, then 6 times, then 2.7 times, then 1.5 times, which is, I would say, not being priced in. I don't know. It's all a matter of the like another thing that I would say about Nebius and why it is risky is we don't know how the margins are going to do over time. We don't know about the competition. There's a lot of things that are unanswered questions for this name. Okay. Let's see. What's your waist size? I have 25 pairs of good cargo shorts. What was that program? This is Fiscal AI. Okay. How do I say this? I have a very exciting announcement. I'm not getting confirmation. I was hoping to get confirmation that I could say this tomorrow. And I'm not getting that confirmation right now. I'm getting left on red. If I have to push it off, we'll do it Friday or Monday or something like this. But I have an unbelievable announcement. I can't wait. But yeah. I want to say it's so bad, dude. It's so hard to hold my tongue here. But yeah. Now I'm getting into things with YouTube where it's like, and this is not unique to me. I'm not like special or something. It's just getting to that size where it's like, okay, this is under contract now. You know, I literally can't say, you know, so I would tell you, I'm not trying to be that guy, but I also don't want to get in trouble either. You're finally converting to miles? No. Okay. You and Jensen are getting fitted for new leather jackets. That would be so fun. Like an interview with Jensen, but we're actually doing something. I'm talking to him about artificial intelligence, but he is, you know, we're actually getting stuff done. That would be awesome. Okay. Yeah. Ladies and gentlemen, can we please have a hint? No. Ladies and gentlemen, I'm going to leave you guys there, however. Thank you all so much for watching. The markets are, you know, doing its thing. Nothing is honestly happening today. The Manus AI acquisition, I think, is going to do very well. Silver's climbing back up to $70, you know, per ounce, essentially, and down, not out. SoFi is down 10.7%, while SoFi is down just 0.09%. Another reason why I say all the time, never buy those products. The 2x leveraged ETFs. Really do appreciate your guys' time. Bye for now.